Hello, welcome to Property Question Time. I'm Stephen Galpin, and this is the show where you can put our property experts to task with your property related questions. And joining me today is Michael Allison, Commercial Director of Roma Finance Limited. Welcome.
Hello.
And joining Michael is Chris Barry, Business Development Director of Thomas Legal, National Conveyancing Firm of the Year. Welcome to you too.
Thank you very much.
Now then, both your second time on Property Question Time, so we'll expect some really slick performances today.
We'll try.
Okay. Michael, it seems that the increase in property sales will always be dictated by the buyer's ability to fund their purchase. There is no question that the need for bigger deposits has put pay to many young people being able to buy. Do the panel think that in parallel with reduced deposits for buyers, lesser deposits for development funding would greatly increase the level of property stock coming to market?
It's a good question. I think the immediate answer is lenders will always have different methodologies of how they manage risk. But certainly lenders lend against the value of the property or the asset at the time of commencement. So that's the piece of land, the LTGDV of the end product. So the deposit shouldn't really change if the variables are still the same, if the lender sticks to an LTV or a loan to value or a loan to gross development value methodology. But there are more ways if the lender does require more security. It doesn't always have to be a cash injection. There is the opportunity maybe to leverage against portfolio assets of different properties that the holding company or the applicant may have.
Right. Doesn't that rather go against developers who tend to ring fence each development as they go along? I have just looking at our legal expert here, smiling at that one.
I think it does, but a lot of lenders will take personal guarantees from a developer anyway, and that's an all-encompassing guarantee of what they have it.
Michael, one of the things that I just want to bring up there, you're right, you say the bank or lender will look at the asset value at starting point, either value of the land or whatever else. Now, we get a lot of interest in modular building where you buy components like bathrooms, kitchens, one thing or another in sort of boxes delivered to the site. But I'm told by developers that the problem with this is that those modular producers want cash up front. They want paying on the dot, on delivery, before it actually goes into the real estate, in other words, a chargeable asset. So they have great difficulty using that system, which would speed up building no end, because the banks won't fund it. Is that right?
Yeah, ultimately.
Or is there a way around it?
Without giving away any secrets, but certainly in the lending industry, it's all about security for the finance. And you're correct in what you said with the modular build. What actually needs to happen is probably communication more with the companies who are constructing the modular housing to find out a way around that. Maybe money can be held to one side, or how can we get a chargeable asset as a lender? That way, we're all about mitigating the risk of what if it doesn't go onto the piece of land, or if the building doesn't commence. Well, actually, how can we get comfortable? And it's about opening up dialogue with the companies who are actually produce the goods, as opposed to trying to do it via the applicant.
I think it's a little the same, isn't it? Where you do a big, 60, 70 story development, the amount of white goods you've got to buy to put, your supplier has got to buy to put into those things. And before they go into the building, they're probably housed on site somewhere. They've got to be paid for. There are very few suppliers that could afford to fund that and just hold it without getting revenue.
Quite a few sizable developers, though, will take the money off the client at point of reservation to amend the interior of the building to their spec. It's quite a common method for a freehold house rather than a unit here.
Yeah, I whether it wouldn't be very terribly practical with a sort of high-rise building, would it?
No, not overly. I mean, that's obviously for a block. That's what's happening at the moment with a self-build, though. If the client owns the land, they can get 100% of the funding for the build cost. So they can build it themselves. I heard something really interesting yesterday where in Australia, the government was paying or incentivising people to go off and build their own houses. And it was quite sizable, but that would be enough to purchase these things.
Can I tell you, we had that here 25 years ago, and the wreckage is just down the road here of unmortgageable houses built by amateurs, borrowing 100% of the money. It didn't work too well. But that, of course, was in the days when Docklands was first starting off, and the Docklands Development Corporation, which was very strong at the time, sort of said, right, well, you can actually build whatever you want. You just submit the plans, and if they fit with building regulations, you can build it, which is why we ended up with a lot of these low-rise buildings, because the land wasn't valuable at that point and planning and everything was fairly lax. But of course now all those buildings are being pulled down and replaced by huge high-rise developments. Difficult, do you think?
Well, yeah, I think from the modular piece, it needs to be embraced. We need to embrace it because we have to get ahead of the times. It's not just about the speed of construction, it's about the sustainability that those properties will have as well. And if we are going to meet any kind of home quota, it's about that quality, longevity of houses. So I think it's up to the finance companies and the modular developers to have that discussion about how we can get comfortable to lend the money.
Yeah, there isn't necessarily a shortage of housing, it's a shortage of quality housing, isn't there?
Yeah.
That's the issue. It needs to be quality.
I think the simple answer with that is, I think you'll see shall we say the top 10 developers, house builders, they'll just be buying their own modular factories, won't they?
Yeah.
That's the simple answer, isn't it? Just bring it into the firm and fund it that way. All right, okay. Chris, what improvements to the collection and coordination of information would the legal panelists like to see, which could hopefully cut down conveyancing times? Now, warning, you've got 5 minutes, no more.
Yeah, I think we've done a lot right in this green and pleasant land, haven't we? But the house buying process is not one of them, sadly. So you've only got to look north of the border or across the channel to find a house buying process that is quicker and easier. I'm really, really delighted to say that over the past 12, 18 months, I'm hearing more estate agents, lawyers, mortgage brokers talking about upfront information. The key one for me is probably local authority search for 2 reasons. One, because the local authority search on average is taking around 3 to 4 weeks. In some local authorities, tremendously longer, 12 to 15 potentially, especially over busy periods. But the local authority search ordering is happening far too late in the process. So quite rightly, what the lawyer is doing is identifying their client, completing anti-money laundering checks, getting money on account, ordering searches. And you could be 6, 7, 8 weeks into the process by that point. What should be happening, and I would just urge any client to have this conversation with their lawyer, is if you are selling, do all of this at the beginning. So you can order a local authority search for your property and sell it on to the buyer when you find one. They are immediately then 4 or 5 weeks ahead of the game. It probably more actually, because the buyer's lawyer then doesn't have to worry about taking funds and ordering searches. It's there.
How long are those searches valid for?
So they're valid for 6 months.
Okay.
Search providers will then or can offer a refresh for another 6 months, which is great, and you can transfer the name. So that is definitely a solution. If you're a buyer, I would recommend you contact your lawyer whilst you're looking. Complete identification checks, complete anti-money laundering checks. If you're getting a gifted deposit, your lawyer will need to identify the person gifting the money, find out where they've got the money from, get them to sign a letter of gift to say it's a gift, not a loan. All of these things take time. And if we can do all of that before the property is found, then you're literally shaving weeks off the process.
Okay, two things. I was interviewing somebody a few weeks ago, and they were saying that they were in the business of mentoring agents and helping them up their game, and he was absolutely shocked to see how many agents knew so little about what information was required by the conveyancers. Yes. And some agents are just blind to this. They think they're almost order takers, and yes, I've sold it, I've taken the reservation deposit, here you go, you're off. But so much time could be saved if they were a little bit more diligent in what was required at the point of them taking on the instruction, I suppose.
Couldn't agree more.
I suppose that's one thing. Okay. Anything else you want to add to that?
Just that education is absolutely everything, I think, and the relationship side of things. So when I think, well, I heard 80% of people in this country choose their lawyer based on recommendation. I think what clients need to be careful of is that recommendation is a relationship-based recommendation and not a financial one. Sadly, there are some large estate agencies that are referring to law firms just for commercial reasons, and some of the referral fees they're receiving are larger than the legal fee the law firm is receiving. And in reality, the referral should be based on quality and relationship. If the relationship is strong, the communication levels are strong, and it's a faster process.
Okay, final question to you just on this, and you've just got 30 seconds.
Yes.
Given the Nigel Farage business that we've had, are lawyers being too pedantic about money laundering rules? Are they applying them too strongly? I mean, you touched on it when you said if you've got a gift from somebody to put down as a deposit. I mean, who does it matter to, whether it's a loan or whether it's a gift? Is that the lender or?
The lender, yes. So if there's a mortgage lender involved, the process is taken out of the client's control and is more in the lender's control.
Right.
But quite simply, the process has not been done properly for years and years and years. And now it's just about right.
Okay. All right. Well, that's all we've got time for in this half of the show. So join me again after the break when we'll be asking Chris and Michael more of your questions. Hello and welcome back to part 2 of Property Question Time. I'm Stephen Galpin and I'm with Michael Allison and Chris Barry. Welcome back.
Thank you.
Michael, we've touched on this subject earlier, but as a very specific question, it would appear that modular building products could greatly increase the speed of development and construction and therefore provide much needed stock earlier. However, the purchase procedure for the developer requires immediate and full upfront payments for all the component parts. Do the panel think that lenders will be willing to accommodate these more immediate funding requirements? I think the simple answer is no, isn't it?
The simple answer is we've got to try and find a way to do that.
Yes.
It's only going to become more prevalent as we look to address it. And as I said earlier, the quality of these homes and the sustainability is another reason we should be doing it. There needs to be an open dialogue, I think, between lenders and these providers. I don't think it's going to find its way to the high street very quickly. And this is, again, where a specialist lending can come in and maybe have those discussions. But that won't solve the problem for all developers. You've got your larger scale developers who will need larger scale finance for this. So maybe there's a different treatment. Maybe they need to come to the table and have those discussions. But we need to find a way to make this work with the funding of these schemes and also ensuring that we have the relevant skills within the industry to take advantage of these schemes as well.
I think that's quite an important point. I do worry about the disparity between sort of the huge developer and the guy that's going to build sort of 10 apartments. Is he going to have the skills, the equipment, the personnel who can handle these modular parts? And is he also going to have the strength with the supplier to be able to say, I want them here and then, I want them on a particular date. Yes, my people are skilled enough to make the footprint work for easy fitment. It's quite a complex subject, isn't it?
It is, but business is all about finding your niche within the niche. And there are people who are setting themselves up now to do exactly that. Of a smaller developer, maybe they're even just doing certainly we saw conversions being done that way, or where you take out the existing building but use the original slab. We saw that's been a really prevalent method, but that's only on one unit. So there are people who are embracing it. There will be people who will still be using traditional methods in the future. There'll be lenders who embrace it. There'll be lenders who shy away from it. It's all about finding those niches within the niche. But I do think it's a pressing matter for people to get ahead of, because it will help with keeping this part of the industry going.
Yes. I mean, if you look at what happens on a small building site, it's quite old-fashioned, the process, isn't it? You've got men with shovels and men's laying bricks with bits of concrete and stuff. It's all quite non-tech, isn't it?
I think you'd be surprised as well, is that there are these smaller builders who are, because they're starting out, they're operating differently.
Right.
Even in their appetite to how they're selling their end product. We've got people now who are much more using the visual walkarounds, the drones on site, etc. Whereas in the past it was a board.
Yep.
You get an estate agent to do the job. So people are embracing it, because when people are doing this, it's the business isn't just building a house anymore. It's about delivering an end product that they can then use as a benchmark to continue to grow their business.
When I think back to my early days of selling property in Spain, standing in the middle of a field saying, of course, your pool's over there and the restaurant's going to be over, and sort of pointing at green fields. You're right. I mean, with today's technology, we've got some amazing sales aids, haven't we? Really have.
Well, definitely. If again, the smaller developer is up against the bigger developer. The bigger developer has a show home normally located to near where they're going to be building the next site. The smaller developer doesn't have that opportunity, so it's key for them that they've still got to sell their products. And if the market isn't as liquid as it was, you've got to fight to get to the right borrowers, to price it right, but you've also got to sell it correctly as well. And we are seeing a lot of people use technology. We're seeing people embrace that. So it's not just about how the sites are run these days that's changing. It's the business model of the smaller developer is one that really is worth supporting.
Sure. Just tell me, when somebody applies for development finance, how much emphasis is put by the lender on the construction site, the construction process? How much does a lender delve into that?
Yeah, well, again, every lender is going to be different about what their risk appetite is. But delving into it's key, because on a development site, the value is going to go down before it comes back up. You're developing on an S-curve. And what you've always got to ensure is that the quality of that build, who's doing that build, the quality of the people, the sustainability of the people who are doing it, the procurement of materials, the costings, the in-depthness of that piece. You have to make sure before we all start as part of this partnership that is taken into account. So it's absolutely key. The construction method, again, is key. What risk does that bring? Because as a lender, you always have to start, unfortunately, from the worst case position, which is what happens if, and that's us stepping in. So it forms a massive part of our decision making.
Okay, great stuff. Thank you. Chris, with the potential changes in leasehold regulations, like the reduction or negation of ground rents, the change in lease extensions, do the panel think that leasehold ownership as we know it will eventually be phased out, with long leaseholders perhaps being given a share of the freeholders, an obligatory requirement?
I think that's a dream, isn't it, for any leaseholder or any potential leaseholder. I think the reality is very different, sadly. So we've got a situation at the moment where the new leases are okay. So ground rents are zero and the premiums aren't going to be as substantial. I've seen some leases that are very historic, where it's a bottle of whiskey or a red rose or something like that. But there are obviously thousands, probably millions of leases in that middle category where leaseholders are really trapped. And they're trapped from a ground rent perspective, panicking that their lease term is diminishing and the capital they're going to require to extend it again is going to be significant. So clearly that common ownership dream would really sort a lot of problems. But with everything, when there's winners, there are losers. And what we've got in this country is a lot of multinational pension funds that own a lot of these freeholds. And if they're sat there selling these investments on the basis that they get income through ground rent, they get capital return when leases are extended, these are powerful people. And how the government can dictate that they go from lots of income to no income is, I think, a difficult one.
Well, in any event, I mean, I think the PET principle actually runs through the whole system here. For instance, the government say, well, we're going to make it obligatory that you can let pets into the flat. You've got to allow it. Oh yeah, well, what happens if my head lease says no way? Which takes preference? Well, the head lease, I think, if I'm right. Yeah. Yes. So if you've got all these leasehold blocks, all with gradually diminishing time, and fairly hefty ground rents going up 5 times every 5 years or whatever it says. How can you legislate retrospectively for that? You can't, can you?
Quite right. It is going to be
a nightmare,
tremendous problem. Yeah, it really is. Yeah, ultimately, every lease would need a deed of variation, which is just it's just not going to happen.
If you take the block I live in, I mean, there's 600 apartments in there. How you get a deed of variation through, I just don't know. Half the landlords won't be able to read English anyway, won't want to go to their lawyers, they're living overseas, their rent's coming in, so they're not the slightest bit interested in any technical change that goes on.
And enfranchisement is something that is quite common. On huge blocks, less common, but happens a lot. And, in most scenarios, you will get the majority that want to take an ownership of the freehold, but some won't. They're quite happy to keep it at arm's length.
Yeah. I mean, I've seen a lot of these blocks go through that process over the years. Number one, you have difficulty extracting from the freeholder the names and addresses of all the owners. You're forever quoted data protection, although I think there is an exemption for that particular situation now, isn't there? But you sort of get that. Somebody then takes it upon themselves to write to all the people if they've got the names and addresses, and then everybody's very keen to own the freehold until somebody says, well, of course, I want $5,000 off each of you up front for the legal. Everybody disappears up a drain pipe like a frightened rat, don't they? I mean, they just go, and the whole thing collapses.
Yeah, I think there are things that need to be done and can be controlled, but the dream of getting rid of premiums and getting rid of ground rent on old leases is a difficult one.
It is a dream, isn't it? Okay, well, look, that's all we've got time for. So a big thank you to Michael Allison, Commercial Director for Roma Finance.
Thank you.
Thank you so much for coming in. And to Chris Barry, Business Development Director at Thomas Legal. Thank you for coming
Pleasure.
in.
Thanks for having me.
Great answers, great information. I'm sure our viewers are most grateful. Thank you. I'm Stephen Galpin. Join me again next time on Property Question Time.